Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Now we're starting the second week of December and it's a very important week. Two main risk events, well, one main risk event, but one very important date in the upcoming future. We will have the FOMC, last FOMC of the year on Wednesday, and on Sunday at the end of the week we have the deadline for the additional tariffs on Chinese goods to be imposed by President Trump. Now, this week, last week we had a sharp correction of the short-term trend that we've seen in the past month and a half or so. But that sharp correction seems to have gotten the market a little bit too short, sorry, and potentially create an inventory imbalance. So towards the end of the week, it was sharply reversed with two gaps in 3 days. Now, the week finished like technically on change with a big probe to the downside on the weekly basis, but having two gaps in a day, in a week, within 3 days, opens the possibility of the market being now too long ahead of the risk events. And there is additional evidence to this. When we look at the market profile, we will see that in a second. So overall, the monthly chart is very positive in the sense that there is no excess at the top side. On the weekly basis, we've seen the eight week one time framing stop, but the week finished strong, slightly higher than the open of the week, so it is very close to the all-time high. And on the daily basis, of course, we see this aggressiveness to the upside with a very strong push, gap, balancing range, like overlapping, accepting, and then a massive gap on Friday. So when we look at the market profile, I'll talk specifically about Fridays. You see, after the positive non-farm payroll, the market held the gains on the overnight, open and continue. You have a strong push, but towards the midday, we reach the high. There are a couple of non-excess highs recorded the previous week. Remember that the previous week was a holiday week. So this right here is the high recorded on the Thanksgiving Day, which was a half session. And notice that it was a very narrow and small profile, but it had no excess on either side. So no excess here, but very close to the all-time high. We reached that point on Friday, and actually the E period came within 3 ticks of that. The G period came within 1 tick, and the H period came exactly to the tick, and none of them could take it. So at this point, it is possible that the market had an inventory imbalance. We started retracing. Obviously, this retracement attract buying given the context of what was going on the market. But then the interesting part is that on the M period, when the final volume comes before the week close, we have a strong attempt, a very clear attempt to go for the high and could not reach it. It could not even tag it. It came within 3 ticks of the high, could not take it, and immediately positions were liquidated ahead of the weekend, and we had this little liquidation pullback. So focus for tomorrow is to assess the quality of this late move that we saw. If we start getting acceptance below the afternoon pullback, that will denote change, and that will, basically start building value down here and potentially try to close some of the gap. It is possible that the market has an inventory imbalance and it is too long, and that's why this happened, especially being so close to a major reference like the all-time high. But it's also understandable that many participants don't want to commit and don't want to put a lot of meat on the grill ahead of the non-farm payrolls and ahead of the final weeks where we can hear information from China or the US on the trade front. So let's see. I would expect like besides inventory imbalances, corrections. Other than that, the market, I would expect a quiet market ahead of Wednesday, and after the FOMC, well, we will reassess based on what news we receive about the China trade talks. But immediate focus for tomorrow is continuation, assessing continuation of this move that we saw on Friday. Acceptance within this value area or even higher definitely increases dramatically the possibility of establishing all-time highs, because this is very close in proximity. Is only four handles, and four handles for this market is barely nothing. But if we fail to hold this area and we start going down, the chances are that at least we will repair some of this gap. Look at how massive this gap is, 20 to almost 40. So it's almost a 20 handle gap. That's a very, very large area that has been untraded, or at least in the recent move. So it is possible that the market will retrace some of that before attempting to go higher again. So keep your risk tight, trade well, and let's see what the week brings.